today we've got an investor panel. It's the first time we do this. We're just talking to our community, talking to our investors, talking to real estate investors just like you about their experience in rental income properties. You guys know what time it is. You may be living in Washington, but right now we are live on Facebook for the Tuesday edition of the Not Your Average Investor Show. I am your host, Pablo Gonzalez, and today we don't have Greg Cohen, so I just have his name under me on the Zoom feed, which I still have yet to change. But we got something completely different. We're doing an investor panel today. These are two members of our community that are here to just share their experience. Nobody here works for JWB on this call. This is just the honest, raw truth of how investors think about investing in rental income properties, what their best advice is for you. I'm going to chime in with whatever you can, but we want to hear from everybody. We got with us today a very active community member. If you've been on a call before, you have heard his questions. You've seen him in the chat. He's with us all the time from Washington. Nadim Shah. Welcome, Nadim.
Thank you, Pablo.
And returning guest who has had his own show before, and it was really well reviewed at the beginning of this year. The guy that I call the most interesting man in the world. He is a competition surfer, pro volleyball player, horse racer, alpaca farmer, and a real estate entrepreneur as well. Zach Correa. Welcome, Zach. Aloha to you.
Welcome, Zach. Aloha.
Oh, hui ho. How's it, Pablo? Mahalo for having me back on the Not Your Average Investment Show. Appreciate the call back, my friend.
Oh man, you earned that call back, Nadim. You get we'll see if you get the call back today too, man. But I've got a feeling that it's going to deliver today with both of you guys on here. And as we usually say here on the show, right? Like, this is a community-driven show. We want you interacting in the chat with us. We want you asking questions in the Q&A. And if you are looking for information on how to be a great rental property investor, you're in the right place. If you're looking for best-in-class property management practices in Jacksonville, Florida, you're in the right place. And if you are a real estate professional looking for an edge of information and opportunities in the Jacksonville market for you or your clients, you're in the right place. Next step after this is chatwithjwb.com. And like we said, for our community that knows where they're at, that comes all the time. Yeah, I think we're used to this. This is the new tradition. It's the roll call, right? We got Nadim is already saying hi, y'all, but he's on the call with us today. Jennifer fills in. Hey, guys, as she's saying. John Hannon, good afternoon. Bill Shields, buenas tardes a todos. Soles con armas en Duval. Bill, you're really upping your Spanish game, buddy. I'm gonna have to check in. Leo from California with his good morning, who's coming with us on Thursday. Zach Correa already in the chat saying aloha to everybody. Who else is in here? Drew Barnhill checking in from Atlanta, from Woodstock, Georgia, I believe it is, right? Just outside of Atlanta. Good afternoon, Drew. Anybody else in here? Who we got? All right. So that is Jay Reyes. Welcome. That's a new name I don't recognize. Good to see you, Jay. Happy to have you. And a little trick that is, if you are new to the show, Saori Bezoska. Good to have you back, Saori, from beautiful San Diego, California, where Zach is headed to in a couple of days, right? Little Del Mar. Right. So little trick in the chat. Shannon Nelson, welcome from Tampa, Florida. Beautiful Tampa. I love Tampa. Great food. Underrated place in Florida. But little trick in the chat. If you are new to the community, you may not know this, but if you're just opening the chat and talking, it only defaults to speaking to me and the panelists, right? Only Zach and Nadim and I can see what you're saying. If you change it to panelists and attendees, now everybody else gets to see you, what you're saying, and can answer your questions as well as we can. And last but not least, the chat moves really, really fast. So I ask that if you have a question that you want asked live on the show, you use the Q&A. That's a separate button on the bottom right. You just pop it open, put the question in there. I'll make sure to pass it through the filter of these experienced real estate professionals. Louis Goins, that's a new name, Louis. Welcome to the show from Wimayuma, Florida. That sounds like somewhere in Hawaii, Wimayuma, Florida. I like it, man. Welcome, Louis. I hope that you join us in future shows going forward. But without further ado, let's kick this off. Nadim, let's start with you.
Okay.
When you were first looking to get into real estate, what was your mindset? What was your financial condition when you finally decided, hey, it's time for me to get into real estate as an investor, be it passive or active? But what were you thinking? What did your life look like when you first decided to start buying properties?
Well, actually, I got into properties in the 70s and then I got out. I had bad experience. And after that, I did a lot of other things. And finally, I decided here I'm sitting on a couple of properties. Let's go ahead and do a cash refi, take that money and invest it into properties. So I started listening to Keith Weinhold, who says, don't give up your daydream. And he talked about JWB. And so I went ahead and logged on to JWB and started listening to Pablo and GC and all the other panelists and, Zach. And I said, this is a good place. It's a, place where I can, trust the people and invest some money. So I bought my first property. That was last month after, 6 months of listening to different people and all. So that's how I started. And, I'm 74 years old and, there's no age limit to learning.
I love
And
that.
don't be afraid to invest in your golden years. So the plan is play with it, keep, investing. And when I leave this good earth, I'll leave it to my daughters and they can continue.
I like it. So it sounds like you were in the 70s. You got into it. What stage in your career were you in? Like in the 70s when you first thought that you could pull the trigger on something like this?
What stage in my career? That's a hard question, but I was in a good place. Let's say this. I was in a good place. And, I started at that time and then I went ahead and bought a property in Lake Taps and, cleared up the property and started raising some horses. And then I started showing horses professionally. So I was in the show ring with my family, my two daughters and my wife. And I did that for about 20 years and then got out of it. So, that's my story.
That's interesting. That sounds eerily. I had no idea that this was the case, right? But that sounds eerily similar to Zach's story. Zach, tell us, give us your kind of like timeline of getting into properties.
Yeah, so we have been your typical investors, not your average investors, over the years, and we did your things like your stocks and bonds, and we had your Fortune 500, careers where we had stock options, et cetera. So we were heavily invested in tech stocks, et cetera. And then we got into, like Nadim, we got into the horse racing business in 2000 and thoroughbred racing. And so we raised and bred and raced horses for over 20 years now, similar to you.
Awesome.
Yeah, and we also got into the alpaca business. So if you guys have seen me in the prior episode, we've also did alpacas. We did breeding, raising, selling, and we also did fashions before we got into real estate. And so in 2019 is when we first got into the real estate business, when we first heard about fortune builders, is who we started off with. And it ignited our passion to do something different that can help us in our retirement world, right? Eventually we want to retire, and that was our avenue. So yeah, we started off financially with the normal average traditional investments and then got into businesses. I think there's two avenues that I think people are very successful when we're talking about building basic foundational wealth. One, I think, is working our way into high compensation careers that involve stock options that I mentioned, investing heavily in tech stocks. And then third, starting and running and selling multiple businesses like thoroughbreds, alpacas, et cetera. That built our capital. Investing in rental really came after or was secondary to building out our wealth through those means. And I think now we're looking at that it continued to be our primary source when we retire.
Love it. That's That's good feedback. So I find it kind of fascinating that both of you were in the horse racing world. You're both from Washington. This is a complete coincidence, right? Not your average investors indeed, right? And but Zach, you did take kind of you took a pretty familiar route to finding out about rental properties. You invested with Fortune Builders, who is a big partner for JWB. They refer a lot of clients. Nadim, how did you first hear about JWB? Was it through one of these formalized educational programs? Did you see an ad? Did a friend tell you?
I heard through listening to Keith
Oh,
Weinhold.
Keith Weinhold. That's right.
Yeah. So, that's how he mentioned about Jacksonville and a company named JWB. And so that's how I started. So I listened for a while to the webinars, listening to you, listening to GC when Zach came on the first time. And then the other guest who came in, and I said, okay, I think it's about time. Let's do it. So that's how I started. And after I bought the property with JWB, 2 weeks later, I closed on a property in Texas. And then I won in Palm Desert, California. So, this is where I am right now, 3 places. And I plan to buy a couple more in Jacksonville and then sit down for a few months and then get active again. So
I like it. So you guys both, and Zach, we'll get into yours. First of all, I just want to call out Keith Weinhold is Get Rich Education. That's a great educational podcast for property investing. He talks about a lot of the concepts that we've had him on the show. He's great. Zach's episode on the Not Your Average Investor Show is episode 65. You can see that on YouTube. You can see that you can hear it on podcast. Phenomenal episode. Zach has crazy frameworks of acronyms and stuff like that he likes to put in. But it sounds like both of you gentlemen own properties in different places outside of Jacksonville and across, Zach, in your case, across different asset classes. Zach, we'll start with you. What other markets are you in, and what is it? I guess let us know about your property portfolio, Zach, of just like what markets are you in and what kind of like different asset classes you're in.
So when we first started in real estate investing, our plan was to specifically start in residential rental properties, right? And when we started investing, our primary goal was to acquire as many residential real estate properties as possible, right? Towards the end of 2020 and into 2021, our focus actually shifted to investing in commercial real estate. We love, by the way, residential rental properties, but don't get me wrong. As they say, people always need somewhere to live. So we always can find a resident for our rentals, right? That being said, there's some major advantages in commercial real estate. Although our primary investment strategy focuses on residential rental properties, part of our passive income goal is really to create a diversified portfolio, which includes investing in commercial real estate property. And it's a great model for us. When you can purchase a couple of hundred luxury apartment units and or large retail shopping centers with 80% bank financing and private equity for the remaining 20%, plus closing costs and renovation capital as needed, then over the next 3 to 5 years, work towards improving the property by like remodeling units or selling parcels that are available, et cetera, increasing occupancy and hopefully raising rent so that in a few years, we're able to refinance and pay off the initial investment while gaining 100% ownership of the commercial property. It's a big win for us, and when we look at commercial property, like I said, it has very similar return on investments as residential. Commercial real estate provides a larger or a higher return on investment for residential, and some commercial properties virtually guarantee return on investment. And then you can increase the value of commercial properties. So overall, when we think about that, our portfolio has grown to include those type of properties as well. specific to markets, one of the things that GC talked about in prior episodes is around migration, right? You had tech migration in Jacksonville is a big proponent of why Jacksonville is a great market to be in. And one of the big characteristics, besides your increasing rent, besides your price indexing, et cetera, to determine the right market, for us, probably the top indicator to determine what market we go in is the tech migration. So technology is what is my field, right? Advanced technology is the work that I do, but tech migration, watching where people are moving from, let's say, San Francisco to Silicon Valley now, is moving outside of Silicon Valley and into greater population marketing areas. And so tech migration is something that I think, and Jacksonville, by the way, in the tech migration is number 4 in regards to population. So that's why they are a great market. Places like Austin, Nashville, Jacksonville, Dallas, Fort Worth, those are markets that we're in. So the question that you had for me is what markets could we be in? We not only invest in Jacksonville, but we also invest in 4 out of the top 6 tech migration communities. And that gives us an opportunity to be more lucrative in our business decisions. Anyone serious about increasing their net worth and expanding their portfolio with tangible assets, that's where I would look. That's where I would look in those markets.
That's so smart, man. I would love to hear in the comments if anybody else has like that tech migration tip, right? Like I think that's a great indicator to look at for high growth areas. If anybody else in the comments or on Facebook has a tip of something that you look at that's unique, I'd love to hear it. Zach, if I get you correctly, you first built up the single family rental portfolio before going into commercial. Did you use some of the equity from that first portfolio that allowed you to get into commercial? Would you recommend doing it a different way? If you could talk us through that.
Great question. So one of the 3 factors that we consider when we make investments is time, timing, and capital, right? So what I mean by time is, I meant how much time do you have right before, like our end goal is to retire, how much time do I have, right? The second one is around timing, right? It's important for you to have the timing available for that as well. And for us, when we talk about those type of things, we need to make sure that when we look at the timing of all of this, that it is the right time in the market for it. And with the COVID, what happened with COVID, it actually kind of stalled a little bit for us in 2020, right? And so we took a commercial properties class middle of 2020, which made us think about, is there other opportunities for us to expand our portfolio? And so we started to get into the commercial properties. But before all else, as I mentioned, residential rental properties is our bread and butter. That's our primary strategy. We're going to continue to purchase rental properties. But to Pablo's point, since we're not retired yet, all that capital we're building with those properties, we're reinvesting them right into commercial properties. The commercial properties, the big thing about that, as I mentioned, is it's a shorter term in regards to return on investment, because what we're looking at is refinancing after 5 years after all of the renovations and capital build up, so that we can actually refi it, pay back our investment, and continue to have ownership going forward. Unlike the residential real estate, where it's a longer term, as GC says, the deal is in the debt, right? The longer the debt is, the better it is, right? But if the timing and time and capital is not appropriate for you, like if you want to retire in 2 to 3 years, it's a little bit different in your strategy and trying to achieve what your portfolio is going to look like. Does that make sense?
Yeah, that makes a ton of sense. Nadim, sounds like you're in some similar markets. You said Florida and Texas, but you're also in California as well, like Palm Desert. Are you also in commercial properties? And I would love to get from you kind of how you evaluate the different markets of like what you like about Jacksonville versus Texas versus California.
I pretty much agree with what Zach said, about the tech companies moving to Jacksonville or North Texas. And, that's where I'm looking at. I don't have any commercial properties. I just started, so I'm, building up my portfolio. And my plan is to have at least 10 doors. I might not be able to accomplish that all this year. Hopefully, by the end of this year, I should have at least 5. And then go from there. I've been thinking about 4plexes too, but I think I'll stick around with single family. When the time comes, if you want to do a 1031 exchange, it's easier. If you want to sell, it's easier. But if you have a 4plex, it's hard to sell. So I think I'm going to stay with single family. Maybe a duplex. That's about it. So yeah, so I'm just a newbie, a rookie.
I love it, man. I think there's a lot of value in the rookie, right? Like you kind of dove in with both feet this year. And it's funny. I remember you were a part of the community you said it for 6 months listening to us, right? And what made you, I consciously, as the guy that's doing this marketing strategy, this show is kind of a repository for anybody that wants to hang out and get educated and like build trust and make sure that you like what's happening. So we never really pressure anybody into jumping on a call. We always, say, go to chat with JWB. But what changed in your mindset, Nadim, from going from like listener, community contributor to finally deciding, you know what, I'm gonna buy one of these JWB houses and then like you said, looking to add 2, 3, 4 more, this year. What changed for you in that time frame?
Well, number one is trust. And listening to GC and you and the other panelists, Mike Stetson, and couple of the other staff members, listening to Lee, it told me that this is a company you can trust and do business with. What they say, what they promise, they do. And I said, okay, I think I can trust this company and let's do business with them. Jay, they are professionals. What they promise, they do it. And, I didn't have any problems. The staff was very helpful. My portfolio manager, Hannah Ferran, she's very helpful. Hi, Hannah. I said, I'm going to say hi to you. So, I have had, good direction, good help, and everything was made very easy for me. So, and then, like I said, listening to other people, it talks very highly of JWB. And that was it for me.
Makes sense. Zach, as I hear that, right, I'm hearing he was convinced by, Keith Weinhold made you believe that rental properties was right. And then it was like build trust with JWB until he bought in. How about you, Zach? You came from Fortune Builders. I know that Fortune Builders recommends a handful of people, right? Like JWB is one of them. And then there's maybe 1 or 2 more that they recommend. What was your decision like when you decided, am I going to go with JWB, somebody else? Was it because you like Jacksonville the most, or was it a company thing?
Great question. So if you remember in my last episode, I talked about my 5-phase real estate investment strategies, right? Phase 2, by the way, is building your business. And one of the most important steps was establishing our investment team, consisting of real estate coaches and mentors who guided us through the process, including building our portfolio, limiting risk tolerance, putting together an emergency fund, and most importantly, figuring out how much money is needed for real estate investing, right? These are people who are successful doing the business. So when we decided to start investment in real estate as a passive income investor, our focus was not to look for a specific real estate market. What was most important for us was finding a great property management team with an outstanding reputation and successful track record, specializing in turnkey rental properties with instant equity, solid ROI, return on investment, cash on cash returns, located in a strong market, and has long-term residents in place, providing immediate cash flow and the potential for property appreciation. That is a tall task to find a property management company that can do that. But instead of looking for the market we wanted to go in, we were looking for the property management company that had that portfolio that can give us, for us to really, to us, success breeds success. One of the most important success criteria for building, in my mind, a solid rental portfolio is really partnering with the right real estate turnkey team, which offers full service property management for stress-free investment experience, because I'm passive, right? And based on our experience, JWB is the best in class for building rental portfolios. I mean, they're considered industry experts in the real estate fields of construction, acquisition, property management, and client relations. As a property investor, rental property investor, which we have purchased several properties with JWB, as you know, our expectation is all about performance with limited stress investments. And I believe that, you know, JWB, one of their mottos is under promise and over deliver. And so far, they've either met or exceeded our expectations since we've been with them since June. In fact, we have been with them for exactly 2 years. June of 2019 is when we bought our first property.
I'm glad you mentioned the timeline, right? Because you're saying a lot of things that we've been saying for about 1.5 years since I've been a part of this whole experience, right? And for those of you that are new to the call, GC is Greg Cohen. He's the co-founder of JWB. We effectively call him GC on this show. I used to introduce him with all sorts of like great camaraderie and great co-hosts. And then I think Zach solidified it on his episode when we now give him like a roll call of different GCs and then we say his name. But you're saying stuff that, again, that Greg has been iterating and talking about throughout the show, but you bought before the show existed, right? You said you bought it 2 years ago. We've been doing this thing for 1.5 years. How did you come to all these conclusions of best in class and like, you know, that you could count on them as a property management team before all of this existed? Was it word of mouth? Is there some like forum that you were going to, or?
Great question. So it literally is around reputation and successful track record, right? And it's about building. I started off with saying part of our phase 2 is building our business, is that we had great coaches and mentors who guided us through the process. And this is one of the things that we've learned from them, right? The JWB is one of the premier property management team. And why would I go and spend the time researching and interviewing all these different property management companies in the country when I have a very credible reputation coaches and mentors they're saying, you know, here it is. If one of my financial advisors says, hey, buy, you know, a Tesla today, because I know in the future that it's going to be X amount, and has every credibility and reputation to do that, that's what you follow, right? I think replacing the time it takes for us to learn all of this and educate ourselves in a shorter period of time is a great tool for you, because number one in our 5 phases is education, right? Continue to learn. And then depending on your coach, your investment team. And that's what really bought us into the property management team like JWB. And then of course, once we got in, you know, it came to attrition, you know, 2 to 3 year lease resulting in long-term consistent cash flow, resident retention over 70%. Shoot, that's craziness to me. And then of course, Jacksonville market, you know, potential appreciation is just phenomenal right now with growth, property management team, and just the fact that their overall reliability and predictability returns for investments is just outstanding. So we continue to promote them externally and internally within our hub, because they are the best in class.
I love your outlook on learning from people, man. Like that stuff is something I've always resonated with you from the moment that we connected. It's just like your ability to just say, yeah, I just want people I can trust. I learn from them. I don't need, you know, like.
Yeah. What was the term that I used, Pablo? Case. Copy and steal everything, right? Because why would we go ahead and try to reinvent the wheel when we have people who are willing to actually share their leverage other people's success, their systems, their expertise to accelerate my success? Yeah. Learn from other successful investors' mistakes. That's what I say, right? As long as they're willing to give it, I would copy and steal everything.
I love that you brought that up because after our episode together, I've been like, yeah, case, copy and steal everything. Like that's one of the things that I've really like done a lot of. And even right before this call, you were like, yeah, man, imitation is the greatest form of flattery, right? Like that's cool.
Exactly.
Nadim, you've got a couple of different residential properties, different places, therefore not only JWB, right? Are all of yours completely passive? Is your Palm Desert one more active? Is your Texas one more active? Are you having the same experience across the board? Can you tell us a little bit about that?
Yeah, I'm having pretty much the same experience. It's Texas and Jacksonville is a better market. Palm Desert one is more seasonal, but usually I try and sign a year to 2 year leases. And with a clause of the rent being increased by an X amount of dollars over the second year lease. Same thing, what attracted me over here with Jacksonville was that when you bought the property, the tenants were already in there with a 2 to 3 year lease. And, so that was the main thing. And you don't have to worry about, a lease ending a year from now and then looking for tenants to go in. And that's where, JWB comes in with their management team. They take care of all that. So it's, like Zach said, it's stress-free. They're doing everything for you, and it's bringing, return on your investment every month, and it's positive cash flow. So, that's what I look for.
Got it. And are in your other two markets, is it also the same person that sold you the house is the property management team and they're also the portfolio management team? Or is that a kind of a different experience?
No, it's the same thing.
Awesome.
The management team, I researched over there and I went with them because they had a good reputation and, so easy to deal with. And so I went with them. The one in Palm Desert, believe me, I manage it myself. So, I plan to move that over to, my son-in-law who does this and let him manage it for me.
That's right. You talked about getting into this stuff, wanting to give this to your daughters. You also told me on our prior call that your kids are in real estate, right? Like they're kind of already making a move. How do you think of, like what's the difference between what they're doing and what you're doing in real estate? And how do you think of like the future of that handoff for you?
Well, they are a little bit ahead of me, and like they have properties in different states and in Washington, and they just bought a place in Belize. So yeah, so they are way ahead and I'm just learning from them. My son-in-law was the one actually who sent me the link for Keith Weinhold. And then when I listened to Keith Weinhold, he was talking about, Jacksonville and JWB. I'm sorry, I keep messing it up.
No, you got it right. You got it right that time. Yeah.
So yeah, so that's how I got interested in it, and I said, okay, let's do it. Yeah.
Okay.
So.
All right. Are they cash flowing positive on all their property? Like, is a Belize cash flow positive, or is it because they're younger, they just have like a longer outlook and they're just banking on like long-term
Well,
appreciation?
all their properties are cash flow.
Interesting.
Yeah.
Interesting.
Yeah, and he does a lot of other stuff like timeshare rentals and all that stuff. So yeah, so his portfolio is pretty good, and they are pretty much all cash flow.
What stopped you from getting into timeshares and other rentals? Is it seeking a more passive experience?
No, I don't like timeshares. I like more single families.
Mm-hmm.
Where you have cash flow and you have a return on your investment. Timeshare, I don't think you have a return on your investment. So I didn't go into timeshare.
Zach, you ever look at timeshares or any short-term rental stuff? Has that crossed your ideas?
We have some timeshares in Palm Springs and so on, but that was pre-real estate investing, right? It was, we have some timeshares in Hawaii, because I'm from there. We have some in Palm Desert. Any place that has sun, we have places, but and we use it. We can. It's one of those flexible ones that allows you to trade it in for multiple things like cruises and stuff. So it really is toes in the same type of investment. It really is not an investment. It's really just for fun. Then it is an investment from our perspective. But yeah, we have dipped our toes in that before we got into the real estate investment business.
Got it. So how did so for you, the way that I understand your philosophy from that episode 61, toes in the sand is kind of like the last phase, right? Was this
It is the last phase.
something you bought earlier because you just hadn't developed your outlook on it and you were just kind of treating yourself, and now you reverse engineered and you're doing different things?
Yeah, we were going home to visit family in Hawaii all the time, and I didn't want to be, staying over. So instead of paying all that funds for staying at a hotel, we just did, we did exchange and then stayed in for a week in one of those nicer timeshares. That's really what the genesis of it. It was more personal than it was business.
Yeah, that makes sense.
Yeah.
Have you thought about like Airbnb stuff or any other things? Like, you're getting into commercial, right? Like what stops you from going into like some of this like short-term stuff that seems to be sexy these days?
I think there's to me, there's two type of investors, right? There's the passive investor and the active investor. And I know that B&B can be passive, but the initiating into this is just the work. Like I said, time, timing, and capital, right, are the three things that are factors into what we make a decision on. And we have looked into B&B, but we're finding that when we talk about return on investments and having the passive side of it, meaning less maintenance and management, B&B is not something that we're considering right now.
Got it. Makes sense.
Yeah.
I would love, I'm about to get into some Q&As. Jen's got a Q&A. We're about to take a hard left turn here, but I would love it if you're on the call right now and you want to just kind of pick their brain about their decision-making process, or you're considering making an investment, like you use this time right now, access to Zach, access to Nadim. These are your peers that have, taken a couple different iterations of what you're doing. So I'd love to see some Q&A coming in. And now we're gonna go way into left field, right? We're gonna talk about horses. I don't think that I've had two people on a call that are both, have both raised horses and both invested in real estate. I think it's, Jen Filson puts in, how does one get into the horse business, right? Like she says, my mom raises collie dogs and it's a money loser. And she assumed that raising horses would be similar. Nadim, how did you get into the horse racing business? And more importantly, are there any lessons that you've taken from the horse business that you apply to real estate?
Horse racing.
No, not horse. Well, you raised horses, right? You didn't
Right.
Yeah, you did
But
eventing.
go ahead, Zach.
Oh, I think you did eventing, right? So you did.
Correct. Yeah, I was not into racing. I was in the show ring,
Yeah.
eventing in different styles of horse riding.
Uh-huh.
So if you have a successful breeding system, you can make a few pennies. Other than that, it's a losing proposition. So, you have to be very careful. And how I got into it is I used to live in Seattle, and when I saw things changing, and I said, well, this is not a good place for me to raise my kids. I want to move down into the countryside. And when I got my place in Lake Taps, it was pretty, country. Not too many people over there. So that's when I got that property. I said, well, I got this big property. Now I need to have some animals. So as a kid, I had some experience riding horses. So I got horses and started in 4-H. And then from 4-H, I jumped into breeds. And from breeds, I went into show ring. So that's how. And to take what I learned from the horses was my kids. They learn how to gain confidence, how to make confident decisions, and hard work pays off. So that was the payoff by having horses. So other than that, I was not into horse racing. No.
Got it. But that makes sense, right? Like the idea of having a horse racing seems not horse racing, horse raising and horse showing. And the horse business seems like a long-term investment that if you're making good decisions on it, you gain confidence, and your kids were able to learn that lesson now. And now they are successful real estate investors, right? So that is an interesting parallel. Zach, I know that you got some parallels from, how you got into horses and kind of how you manage your horse racing business. You want to share that with us?
Yeah. So, horse racing is something that it's not something that you grow up and says, oh, I want to own horses and race them, right? It's not one of those things. Surfing, on the other hand, I would, but not horse racing, right? And to Jen's question is around, how we got into it is we just stumbled into it. We were meeting with our accountant, and he says, you guys are getting killed on taxes. And so let's think about you guys have done all the things right, 401ks, et cetera. And he said, meet me at the track on Saturday. So we went there and we just fell in love with it. It hit all of our buttons around the things that we like. My wife does show as well, Nadim. So she's done inventing as well. So
Awesome.
yeah, she's done Western, as well as English, but she's done that as well. And so we got into it. But the difference, I think, is that we already we had the business mindset already, right? And so the things that we discovered is, why change, whether it's horses, alpacas, or real estate? There are some commonalities that, if from a business perspective, it makes sense, right? And it's the same thing that we implemented in the real estate. Number one was we accelerated our education. We wanted to learn as much as we could about horse racing, right? And immerse ourselves into all the different programs. We read books, we attended, podcasts, webinars. They have that. They have those things. Same thing for alpacas. Same thing we did as well. And then the second phase was us to start to build our business. And by doing so, we did what I just mentioned earlier earlier is around building and identifying our advisory team and building a business plan. So we went out and met and interviewed trainers and bloodstock agents that has been in the business for some time. And, so we're not starting from scratch. We're not trying to learn everything ourselves. And we cased, copied, and instilled everything. We leveraged their expertise before we even purchased our first thoroughbred, right? We did all of that. And then once we got educated and we got our expert advisory team, we started to do this to acquire horses. It's the same exact portfolio and blueprint that we use for real estate, that we use for alpaca, and that was successful for us. And that's how we built the generation wealth is buying and selling these kind of businesses. But why, it's a model that you can use that's successful. The difference is, to Nadim's point, is for real estate, it's that cash flow, right? Acquiring properties that pay for themselves with positive cash flow monthly. That's the formula. That's the difference between horse racing or horses and real estate, is that guaranteed almost cash flow that you can have. And then of course the 4 or 5 pillars of profits. In horse racing, it's about quantity versus quality. I'd rather have 3 horses that are Kentucky Derby winners than 20 horses that are, that they can't run, right? And it's about cash flow, it's about earnings. And so it's the same philosophy that you can think about, even dog breeding. Think about that, same thing, right? If you don't have cash flow, it's not a lucrative business. So when we think about it, we have a lot of the same modalities and same model that we use successfully in all the businesses that we run. It's a great model to follow.
I love it, man. I love it. If you don't have cash flow, it's not a lucrative business. You've looked at all these different things. That's their own little business models. You go about it by educating yourself, building an advisory team before getting into it. I love the replicable processes that you apply to all this stuff.
Yeah, if I can, I know we have a short time and you probably have questions, but one of the things I wanted to catapult in is last time I keep talking about my 5 phases, right?
Yeah, please.
Pablo, education, establishing the business, diversification, asset protection, and toes in the sand, right? And just for those who haven't heard before, I just want to kind of dissect that a little bit, a basic outline. So I have really 5 steps that make my strategy tick. The first step is dissect your goal, right? It's very important that you pin down exactly what you're trying to accomplish. If retirement is your goal, what income stream you would allow you to retire, and how long do you have to get there? And also, what capital are we starting with, and what's our saving capacity per year? Step 1. Step 2, craft a custom blueprint. Now that you know what your destination looks like, we can figure out what route we want to take. The custom blueprint will tell you how many assets you need to acquire to produce the desired income, and how much capital it would take to acquire them, and how long it will take to build your free and clear portfolio. Step 3, asset accumulation. That is where we move from planning to execution. Now we know how many properties we need to own, so we go about our business accumulating, whether it be residential rental properties or commercial, real estate, multifamily. Step 4, capital growth. This is where you talked about how we were able to transition from residential to commercial. We acquired the right number of good quality JWB properties and assets. It's time to grow our capital base. But since the goal is to reach a certain level of income at retirement, we can use the current income produced by the portfolio to aggressively pay down the debt on the portfolio we focus on. And step 5, maximize the income, toes in the sand. Time for you to get rewarded for your discipline and ninja execution. That's kind of simply put, kind of how our strategy ticks, so to speak, in 5 steps. That ultimately our objective is really to quit our current career once we're financially free. Short and simple.
I love that you shared that, man. Thanks for taking the extra time, right? And if you want more brilliant frameworks like that, check out his original episode with us, which is you dropped like 5 or 6 different like acronym frameworks into that. Case this one, all these different steps. That's clearly how your brain works. I love it, man. Louis Goins asked a question here. Louis is from, what was it? That town in Florida that sounds like it's from Hawaii. Louis asks, what measures do you do or have you done that have kept your renters paying during COVID? Zach, do you want to answer that one first?
Yeah, so we have done nothing as a passive investors, right? This is where I think for those who have not yet invested in premier property management company like JWB, that's what we talk about. Nadim and I are talking about worry-free investment, right? I don't worry about that. I worry the people who take care of that is JWB. That's where we put our trust, and that's where we put our expectations, and they have the reputation to do that. So to answer your question, kind of skirting the question, is that I depend on the expertise of my team to be able to manage that. And they let me know communication is key. They let me know when things are going awry in advance, but I trust in their ability to manage the property without me intervening.
Yeah, there you go. Nadim, how about you, man? Have you had to do anything special to keep your tenants in during COVID?
Not really. It's the management team. They take care of it, and I don't have to worry about it. Plus, my portfolio is not as big and wide as Zach's, so I don't have a team. I have my own team, But yeah, like Zach said, you have to have a trustworthy partner, and that partner is JWB, and they take care of it. I just have the one property. Leo, I said, Pablo, you got 2 of them.
Yeah.
And so it has to be a trustworthy partner, and that's where the management team comes in.
Yeah. I'm glad you guys answered it like that, right? Because I think it's the raw, honest truth of just like, you're not in here to be a tactician. You're here to be passive, right? Like to what Nadim alluded to, I've since running the show and getting educated and all this stuff, I've become an investor as well this year. And what I've learned is that everything that they're saying, right? Like if you have the right property management team, you don't have to worry about that stuff. And that's the whole beauty of this business model. And to elaborate a little bit more on your point, Louis, just from stuff that I've learned from being the voice of this content program here for JWB, they really think about stuff long term. And that includes the relationship that they build with their residents, starting with the idea that they call them residents, not tenants. And they look for 2 to 3 year leases, and they renew at a really, really high rate of like 70% plus. And whenever anything happens, they're very proactive about communicating with them. So they understand that relationship with them is what's going to drive your experience. And they're very deliberate about building that relationship without you having to be a part of it. Right. So it's like they make that relationship. They make sure that they are not just your trusted advisor, but they're your residents' trusted advisor. And that's what keeps people in the home during COVID. Right. It's just very simply relationship building, which is something that I personally am very passionate about. I know the guys on this call are as well. And, that's the honest truth. That's what you're buying into, right? It's like the passive experience of just like not having to deal with that stuff. And I can also say that JWB's average tenant, average rent collection is like historically 98.3%.
Yeah.
And during COVID, it dropped to 98%. so it's pretty effective, which, again, inspired confidence in me putting in my eggs in the basket as well. And I'm pretty sure you guys too, right? So who is with us from Spain, Miguel Angel. Haven't seen you in a while, man. Good to have you back, buddy. He asked the question, how much of a thoughtful move and what percentage is it like emotionally driven when you're investing in horse racing and or real estate? Nadim, I'll let you go first on this, whether your decisions were emotional or rational when you got into either one of these assets.
You have some emotional and mostly is rational, because you have to make the right decisions. Otherwise, you're going to lose money. So emotionally, you have to be connected and to earn income, you have to make rational decisions.
I like that. So to benefit, you have to be emotionally connected, but to earn, to benefit, you got to be emotionally connected, but to earn, you got to be rational. I like that a lot, man. We're going to make a quote card of that one for you for sure. Zach, what about you, man?
It's funny. We, as I mentioned, we're very standardized in our portfolios, and we built our business plan for horse racing. And it was 3 pages long. And at the end of the at the end of the business plan, at the bottom, in bold, it said, "Do not fall in love with the horses. This is a business." Right? My wife, she would feed them carrots. We named them, as you know, Pablo, and just named one Silver Surfer, man. That's emotional, right? And
Yeah.
The point is that the emotion does come into play, to Nadim's point, but the reality is that, now with real estate, we're buying properties. All of the properties we own now, I've not been to it physically. We own over 40 rental properties. We own over 5 to 7 luxury apartment buildings, 2 shopping centers. I've never been to any of them because there's no emotion to it. It's all about the numbers, the spreadsheets, etc., and our goals. Once you establish the expectations, it removes all of that. The emotion comes when your toes in that sand and beer in your hand. At the end of the day, that is not.
I like that.
Toes in the sand and beer in your hand. That's when the emotion comes out, right? When I'm on the beaches of Hawaii, because I'm sitting here, toes in the sand, beer in my hand, and people are paying. It's cash flowing. I think that's the key to real estate and horses, is that if you don't have a passive strategy and your model is not working for you, then you need to change. You need to get out of it, and you need to find something that's more successful in achieving your goals. And emotion can play a part of it, but it really is realistically all the things you talk about on JWB and the Not Your Average Investor Show makes sense. The formula works, and let it work for you so that you can do the things that you love to do. Financial freedom, right? That's how I look at it.
Very true.
Love it. Great question, Miguel, man. Like I did not think to ask something like that, but it actually really good responses by both of you guys. All right. Wrapping it up here, fellas. I gotta ask just a simple question of if you are, somebody in the chat right now is thinking, is this the right time to invest in real estate? Is JWB the right move? Should I be thinking about other things? I guess I would just open it up and say, Nadim, if you had like one piece of advice for anybody that's been on this call, something that you haven't said yet, what advice would you give them?
Do your homework. Trust your partner. The partner is your management company, and go with your gut feeling.
Love it. Love it. Concise. Zach, do you got some of that concise, or are you going to give us or did you prepare a nice little thing? I know you're a prepared guy.
No, not prepared, but I always have to go back to GC, great concepts that I've learned, lesson learned. The deal is in the debt, smart debt, right? 3 things. Focus on the return on investment, meaning the best risk adjusted return. Diversify your portfolio if you can, and establish consistency with your cash flow. If you can do that, you're win-win. That's a win-win. You're crushing it.
You guys, you crushed it today, man. This is awesome. This is really cool. I really appreciate you guys coming on. Like this is something new. It's always me and GC talking to somebody else. I've never talked to 2 people at the same time and just kind of moderated it. You guys really knocked it out of the park. I really enjoyed it. I hope everybody else really enjoyed it. Zach, great to see you again. Nadim, good to have you on the show for the first time. And I really, really appreciate the value. And I really appreciate the 30 plus people that have been hanging out with us. This is it's a Tuesday in the middle of your workday, right? Like that is not a moot point to me that you take time to hang out with us in the community. It makes us feel like we're putting out that value to anybody that's looking to own rental properties or looking to find out about property management or looking to get an edge in the Jacksonville real estate market. If you like what you heard and you want to take a next step, the next step is you go to chatwithjwb.com. You pick a time to talk to Courtney. Courtney's going to ask you what your goals are and see if that stuff, see what they can reverse engineer there for, does this make sense to you? Does it not make sense for you? It's really a get to know each other call on both sides. So I highly recommend that experience. I would love it if you came back on Thursday, where we're going to talk to Leo from California, who was hanging out with us earlier today. Usually Thursday, we do a rental property of the week. When Greg's out of town, we do a rental property investor of the week. So we're going to look at a property and Leo's going to break it down however he sees that he thinks it out. I'm going to break it down however I think it out. I'm a property investor now too. And we're just going to have another open conversation. And we'd love to have you in the Facebook group. We have 3,000 people in that Facebook group, jwbfacebookgroup.com. We'd love to have you there. And gentlemen, it has been an absolute honor and a pleasure. Any last words to send us away, and we'll shut this thing down.
Well, mahalo everybody for spending the time with us. It was great to talk to everyone.
Thank you everyone for talking to us. I am enjoying it. I think rental properties with positive cash flow is much more better than running fast food franchises. I had 3 fast food franchises and I sold them all. So I'm enjoying my retirement and, enjoying the company of great people like you all here.
I love it, man. I hope I see you guys hanging out in Washington one day, grabbing a cup of coffee or grabbing a beer or something. Maybe invite Damien, who's somewhere close by.
Here's a tip. Del Mar, I think race 8, Carpe Fortuna.
Oh, Del Mar, race 8, Carpe Fortuna.
Yep, on Sunday.
I'm betting it all.
Yeah.
See you guys all later.
Bye.
Take care.